we can expect now to get it?
So oncology injectables is a facility where we'll be filing a host of products in the next 3 to 6 months. Once we file that will trigger an FDA inspection. And then it depends on the FDA whether they will physically come out or not. So that awaits to be seen.
And we have already started filing from other two facilities, two new facilities, Jarod and...
So Jarod is also we have filed, but I don't expect the US FDA will come for that facility anytime soon. That is just another OSD facility. So it's not mission critical for us as well. We already have a commercialized OSD facility. So the other one is the F3, what we call the general injectables, where the FDA has already come and they've given us a few observations, which we would like to.
Okay, fine. And that's it from my side.
Thank you.
Thank you.
Thank you. The next question is from the line of Anmol Ganju from JM Financial. Please go ahead.
Yeah, hi. Thanks for taking my question. My first question is slightly a repetition. So when we look at the 18% decline in US, and we were to kind of attribute a significant part of this to starter normalization, or even from a base portfolio standpoint, we see the pricing pressure has been significant or nothing has changed there. So any of the three?
Yeah, so I think by and large, it's been sartans for this quarter, at least it was sartans. During the year, we had other products, but that is something that on a quarter-on-quarter basis, we haven't seen that as yet. Right now, we've only seen that on the sartans, which are a big chunk of our portfolio last year.
Thanks. That's helpful. My second question is on the sharp growth in non-US generics. So anything in specific you would like to call out here, or
I think Anmol, in terms of this, there's nothing specific per se. I think we've just continued supplying, and the order books look like that. You have to put this into perspective that last year itself was very weak in this territory. So that is one of the reasons why the numbers look much rosier than they do. Actually, the last 2 years have been quite weak for supplies for us. That's why it looks better. But I expect growth to continue not at these levels, but a normalized level about 10-15% or so.
Thanks. That's helpful. My third question is on API. Full year 35% growth, so quite a healthy base to contend with for the next year. But with this new base, what do we think this part of the business looks like in terms of?
Good question, Anmol. Again, I would like to break up this API business into the first half of the year and the second half. First half of the year, we started off on a bang where there was lots of opportunities due to the disruptions from China, and the first half was a lot more robust in terms of growth. Part of that has tapered down because Chinese companies are back on supplies, and also the use of azithromycin in the treatment of COVID has come down compared to what it was from March 2020 till June 2020, July 2020. That is one reason. Second thing, what happened is the Chinese are back in the market, so there's some competition there. Having said that, the API business on this new base, I do expect it to grow by 10% at least. Moving forward, we've got a good headway into some customers. This particular quarter, Q4, was a little lumpy because we had one large contract manufacturing deal where we supplied quite a bit of product.
Thanks. And my last question, Pranav, if I may. So 15 product launches for next year, around $55 to $60 million quarterly run rate in the US. So when we look at the next year, you think that $300 to $325 million is where our new base should lag when we look at the US from a full year picture standpoint? Does that look reasonable in terms of when we map out the US business next year?
So, no, I would not like to give a guidance. Having said that, I think for the US, we will not have much growth for the next couple of quarters because while new products, some of our new launches have done well, the whole sartans and the one-time buy opportunities we had in the last 2-3 years was quite chunky. And so I expect the US to be muted. It'll actually be a degrowth. If you see that going from a base of 70-75 million to 55 to 60 million. And so it will be muted, maybe a little bit of a degrowth. We'll try and make up whatever we can with new launches.
Thank you. That's helpful. And all the best.
Thank you. Thanks, Anmol.
Thank you. The next question is from the line of Damayanti Kerai from HSBC Securities. Please go ahead.
Hi, thank you for the opportunity. My first question is on the operating cost. So, obviously, R&D is lumpy quarter on quarter depending on progress in projects, but we have seen a bit of variation in staff cost and other operating expenses also. So, how should we look at this part going ahead? And you still maintain that 50 rupee EPS guidance for FY22?
Yeah, as of now, again, there's a lot of variables and unknowns, but as of now, we are holding on to our EPS guidance of 50. As regards the cost, I'll let Mr. Vivek and Mitanshu just jump in.
Yeah, I think broadly the costs are in line quarter after the quarter. But if you have any specific observations, just tell me. I mean, we can clarify further.
No, I was just asking from a difference in, say, staff cost and ex-R&D, other expenses in fourth quarter.
If you look at my fourth quarter when you compare with the previous quarter, that is quarter 3, they are almost flat, similar numbers.
Okay. So my second question is on India part. So this again sequential decline. Is it more due to I'll say seasonality in sales, or the anti-infective sales are coming down? And going ahead, how we should look at India growth in a very broad sense?
Sure. So you would have seen my specialty divisions have all grown well. Cardio, diabetology, gastro, women's healthcare, ortho, all of them have grown in line with market or slightly better than the market. Where we are facing some headwinds are acute division. But within acute, I would say anti-infective is relatively better. We are doing better than the market. We have grown anti-infectives 5% against the market degrowth of 10%. But cough and cold, we have degrown, and the whole market has degrown. We have degrown in line with that. Also, in acute, I think we have a large pediatric portfolio, and the pediatric portfolio continues to degrow, which is true for the entire industry. Going forward, as I mentioned earlier, we don't expect the last year's kind of washout, even if there are lockdowns or partial lockdowns. The doctors have largely been vaccinated, most of them double dose, and they are operating in their clinics, and hopefully things should settle down quickly. So very early days, but I think as of now we seem to be in line with our growth, what you call expectations.
Sure, thank you. And my last question would be on CapEx. How should we look at CapEx plan for FY22? And do you have plan to expand on the API facilities?
So we have this year itself, in March 21, we have spent some money on API, and that's part of our CapEx for the year which I talked about. Broadly, the project-related CapEx is over behind us, and I think there will be some maintenance CapEx. There will be some addition because of this pre-operative continuing, and probably during the later part of the year, depending on how soon we get the approvals, etc., for the general injectable facility. As we said in the earlier call, we may be putting up additional lines, so that will cost some money.
Okay, so barring the project cost, we should be broadly in, I'll say, mostly continuing with the maintenance and some expansion on existing facilities.
Yeah.
Okay, sir. Thank you. Thank you for your response.
Thank you. The next question is from the line of Charulata Gaidani from Dalal & Broacha. Please go ahead.
Yeah, my question pertains to ROW. Can you give some more details in terms of ROW growth, whether it has come from new markets or volume, prices?
Sorry, you said for the ROW, I didn't catch that.
Yes. ROW markets.
Growth has been, it's not the pricing growth, it's been predominantly a volume growth, because what happened in the ROW markets, which is for us Europe, Australia, and Canada. What happened is over the last 2 years, so FY19, FY20 were quite weak in terms of supplies, and we had a lot of supply chain-based issues due to serialization. So this is mainly volume-based growth in these markets. So there's been no pricing change because we supply to our partners who are the pharmaceutical companies who market these in the territories.
Okay. And how much of the overall sales would be coming from COVID?
COVID, we don't, as I mentioned earlier, we don't really have any COVID products per se. The only one that we have is in the India market, azithromycin, or our brand of azithral, was used during the early part of the year, and then again right now, last couple of weeks. But that's for upper respiratory tract infections. That's the only one. There's not a direct COVID therapy that we have.
Okay, we are not exporting.
No, we're exporting azithromycin as an API, but nothing else.
Okay. Okay, right. And can you give the quantum of capex for FY22?
So as I said, it will be largely maintenance capex and the pre-ops. Depending on at what point of time we get approvals for the injectable facility and how the volumes pick up, we'll put up more lines on the injectable plant.
Yeah, but the amount?
So depending on the situation, it will be between 500 and 700 crores.
500 crores.
Yeah.
Okay. Yeah, fine. And how much of India growth do you expect for FY22?
So we don't give guidance on the sales numbers, but as I mentioned in my opening statement, we expect our specialty business to grow faster than the RPM, their respective molecules in the industry, and hopefully acute now we should start picking up again.
Okay. Yeah, fine. Thanks. All the best.
Thank you. The next question is from the line of Aditya, an individual investor. Please go ahead.
Hello. Can you hear me?
Yeah, go ahead.
Yes, sir.
Yeah, thanks for the opportunity. I just want to understand the API business. It was regarding the azithromycin, what we have got the growth, it was regarding that only? Or are we seeing any more demand, or we are increasing the capacity?
So API, the growth was across all our products. Azithromycin is a big product for us where we do supply all over the world. So that is one part. But most of our products across our portfolio is where we've seen growth. And we've seen growth across the territory for all our API business as well.
Okay.
So across geographies, what Pranay is saying, across geographies,
Okay.
Aditya, our API investment also has to do with our own captive consumption. We are having more products, we are having more formulations in the market. Our API capacity also needs to be ramped up.
Okay. Okay. Again, one more thing regarding India business. As we see, we are having large exposure to US markets. So there are always uncertainty regarding pricing or everything. As we see, our very less contribution is coming from India business. As we see, large pharma companies also, they are trying to increase their market in India business. So what is your view regarding the India business? How do you want to maintain the India business, which is the branded business?
So, Aditya, actually, you have to see across our peers in the industry, each one has a different percentage of international versus India. If you see, on one extreme, we have an Aurobindo, which is almost all international business, and not pretty much hardly any India business, versus some of the others have about 80% India business. So it's really a difference of where we are and where we want to be. Number two, they are not, it's not one at the cost of the other. It's not mutually exclusive. India business, as you know, can continue to grow, and there's nothing stopping us from not focusing on India business, right? The addressable opportunity size in the US is much larger. That's why we've seen a US business, if you don't take this year, or even if you take this year where we've grown 9%, but over the last 5 years, we've grown at a CAGR of over 25%. Versus India, you can grow consistently anywhere between 5 to 10%, 15%, depending on where you are. Again, the India business is very different because it's a high ROCE kind of a business where the returns are much higher, there is not much capex required. So it's not mutually exclusive. I think the both can coexist, and that's how we've set up at Alembic also.
Okay. So where do you see, like, in 5 years, your India business regarding the revenue contribution? It will be the same, like what it is right now, or you want to increase more branded business, or?
I think we are trying to grow all our businesses, so there's no question about India business will also continue to grow, as well as the US, both.
Okay. Okay. Thank you.
Thank you. The next question is from the line of Kunal from Valem India Discovery Fund. Please go ahead.
So thank you very much for the opportunity. Sir, firstly, I wanted to understand regarding this FDA inspection which happened in February 21 for F3. I wanted to understand the process and methodology which FDA followed in doing this virtual audit.
So actually, the audit wasn't a virtual audit. It was a physical audit where they came in person. In February, a team came. They are not coming generally. They're only coming if they deem there's some product which they claim is mission critical. We were following up with the FDA to get them to do a physical audit because we wanted the plant to be up and ready. Hence, they came in person and they conducted the audit.
Understood. And regarding regarding Edior, so could you please give us an understanding as to how we expect the launches in Edior to happen over the next 2 years? And could you also give us a number of the total investment which has gone into Edior till date, including the capex and the pre-op process and R&D investments combined?
We have been close to 10 odd filings we have been doing actually, and we've started getting approvals also in the same tandem. We've right now with 8 products launched as far as Edior is concerned, but we need a meaningful basket. So I think a year and a half from now we would have basket of 25-30 products, and then it would make some sense in terms of total top line, bottom line contribution. Actually, we spent close to 250 crores on capexes. We spent 300 crores on R&D, and that is how the Edior balance sheet looks like at this point in time.
Understood, sir. Thank you. That is very helpful, sir. And sir, one thing I want to understand regarding our total API capacity. By that I mean the capacity to supply not just the outside customers but our own formulation units. So where we are in terms of the capacity which we have for the API to fund the next level of growth once even for oral solids we have the F4 ready in the next 12 to 15 months hopefully. So are we in a situation where API will be a constraint for growth and vertical integration for our products?
So we have been also, as I said, we have been investing in API and we have been increasing the API capacity also across our. So we don't plan to put up a new campus for API, but in the existing campuses, API 1, 2, 3, all are expanding. So we are okay with the capacity expansion and should be taking care of our business needs.
Understood, sir. And just a final question for my answer. Sir, now at this level of ex-US business, the ROW business. Now this business being a purely B2B business, wanted to understand, sir, how regarding the margin profile of this business, would you say that this margin of this business is now better than the US business, or would you say that it is in line with the US business of the company?
We don't give geographically margin breakup. Having said that, the ROW business, as you've seen, is a pretty amazing growth this year, 57. Next year onwards, I expect it to grow by about 10 to 15% or so.
Okay, sir. Got it. All the best, sir.
Thank you.
Thank you. The next question is from the line of Sayan Mukherjee from Nomura. Please go ahead.
Good afternoon, and I hope things are, okay at your end. I just wondering operationally, what kind of challenges, because, these COVID cases have spread to every nook and corner. So when you look at your operations, plant operations, MRs on the field, what kind of challenges, are you facing any difficulties, people coming to work, etc.? And operationally, is it hurting your operation in any ways?
Yeah, so I'll answer in two aspects. One is for the plants that we have for the international markets that are based in and around of our corporate in Baroda, we are absolutely okay. I think at the corporate we have fewer people and we have more work from home. But as regards manufacturing, we are coping okay with it and it's not impacting operations in any way.
Yeah, same with field. I think the field movement has been restricted a bit, but now the MRs have enough experience of doing virtual calls with the doctors through phones, Zooms, engaging them into the what we call detailing of the product. So far, it's good. Better than last year at least. People have learned to live with the situation and we are better off.
And sir, on vaccination, is there a priority for the sector and people operating in the sector? Is it possible to vaccinate employees faster?
So IPA and I think a couple of other organizations have written to the government, but at that time there was no positive response. Now, of course, vaccination is open to anyone above 18. So I think once the availability becomes better, we expect the vaccination also to pick up the speed.
Okay. And so one question on any...
Sir, I'm talking about our employees. Of course, the doctors and the healthcare professionals are vaccinated.
No, I'm just saying, the pharma industry being an essential industry, the people working in plants, is there any priority? Is there any priority now? So it seems it is not. Okay. And sir, on the cost side, any thing that you would like to highlight on the raw material front or logistics front, anything which is worrisome at this point?
As regards the supply chain, raw material logistics, absolutely fine. I don't see any issues at all. Last year was a very different story. Again, last year also not that we had any issues, but right now, no. Right now we're not seeing any issues.
Okay. Sir, one very specific question, if I can, just the capex number for this year and next year. I might have missed it. If you can just repeat it, sir.
So this year capex was about, I think 600. 670. No, 670 was R&D. Okay. So this year, March 21, we had a capex of 670 crores. And as I mentioned previously, I think it will be in similar range in the coming year. So about 500 crores of base maintenance capex, some investments in EPA, etc. And a couple of 100 crores, depending on the situation at that point of time, on expanding the capacity for our injectable facility. General injectable facility.
Okay. Thank you, sir. Thanks a lot.
Thank you. The next question is from the line of Pratik Gandodra from Drone Capital. Please go ahead.
Hi, Pranav. Hi, Mr. Baheti. How are you guys doing?
Very good. Thank you, Pratik.
Yeah, I had just one question, that this new, the capex plan, the project that we finished on injectables, when should one reasonably, obviously it depends upon the FDA approval, but reasonably when should one expect revenues to come, and when should one expect that this capacity is reasonably utilized, almost fully utilized? How many years do you think it will take for your...
I think in terms of starting commercialization, I would say the earliest that will happen would be H2 of this year. That's a reasonable expectation. As regards getting to full capacity utilization, as you know, the facility has a provision for 6 lines. We've only populated with 3 so far. So it depends. I think one of the lines we expect that by 2024, FY25 is when it will be fully occupied and we'll have to expand that out. The other 2 will be okay, but I would say FY24-25 is when we'll be at a decent level of commercialization.
Yeah. And you have approvals already in place, right, for a few injectable products?
No, because until the FDA clears the facility, you will not get any approvals.
Okay.
We've got filings in place.
You got filings. Okay, fine.
Yeah.
Thanks. That's all I had. That was my question. Thanks. And hope everyone stays safe. Thank you.
Thank you.
Thank you. The next question is from the line of Nitin Agarwal from DAM Capital. Please go ahead.
Thanks for taking my question, sir. Sir, on the cost, the cost related to the domestic promotions, what is your experience been, sir? Have there been any sustainable savings which have eventually come through in the domestic side, given the way the ways of doing business have changed in the domestic business?
So there has been some reduction in the traveling cost, but we were, like we discussed in the past, our promo expenses are mostly scientific, science-driven and in-clinic support to doctors. So that continues. We have not seen much significant change in that.
So on a broad level, not much from a structural saving perspective that has come through in the post-COVID world from a domestic promotion perspective.
Yeah, that's right.
Okay, sir. And Pranav, on the US business, now if you were to just back out the Sartans business and in terms of where the business is going to be next year, versus your expectations, I mean, is this in line with what you would have seen the business to be say a couple of years back, or have there been some sort of setbacks versus what were the initial expectations would have been around the size of the business?
So I think it's a combination. I think there have been some positives and some negatives. I think in terms of generally, I think the US business in certain segments has been more competitive than what we had anticipated. If I take the Sartans out, and I think not just us but across the board with our peers in the industry as well. So there's been more competition in certain areas, especially some portfolios such as Derm and some of the others. There's been a lot more competition than we expected. The Sartans was a surprise. I didn't expect that, so that was a big positive. So by and large, I think we're okay where we see the business going forward. In terms of our internal product selection and how we look at the US business, we've become a little more stringent. We've changed our outlook a little bit. Having said that, not outlook, we've changed our expectations a little bit. Having said that, in the mid to long term, we're still quite bullish on the US market, and we expect it to be a decent market.
And if you give us the last one, Mr. Bedi, on the COGS, I think with Sartans now sort of normalizing out, the 74-75% gross margins now, these should be a broadly sustainable margin number to run with?
Yeah, a couple of basis points here and there. You are right.
Okay. Thank you very much.
Thank you. The next question is from the line of Tushar Manudhane from Motilal Oswal Financial Services. Please go ahead.
Yeah, thanks for the opportunity. Just one clarity on this inspection related to injectable facility and the product approval. So the product approval is stuck because of product specific queries, or they have the compliance related queries on the plant side?
So the product will only get approved once the facility is approved. And this is the first time filing, so hence the facility has to get approved first. And once the facility is approved, automatically the product approval will go through.
And so just to extend to that, so whatever related to observation related to work, which
it's more the observations are more related to processes and systems in place.
Okay. Thank you. That's it.
Thank you. The next question is from the line of Samir Deshpande from Fairdeal Investments. Please go ahead.
Good afternoon, sir. Thanks for the opportunity. I would like to know, in the balance sheet, our property, plant, equipment is around 1,700 odd crores, and our capital work in progress is around 1,950 crores. So, what is the quantum of investment which will be capitalized out of this capital work in progress during this year? And how much is the investment we have made for US export purposes in this capital WIP?
So this entire investment that you see of 1,900 odd crores, of which 1,800 crores is on account of the new plants, which is F2, F3 and F4. And predominantly these plants are for catering US markets actually. We expect, as and when we expect, approvals to come in for the plants and we put these plants to use, this would get capitalized and put to use, plants put to use.
But currently, because of this pandemic, the movement of the people physical movement of the people from US to India, etc., may not be possible. So it will take further time, or it will be approved after some other way.
We saw in January that one of our plants, F3 plants, general injectable plant was inspected. By US FDA. But it is uncertain that when other plants would get audited.
But until they are audited, we cannot start any export, etc. from those plants, no?
Yes, correct.
So we have to see whenever the things, how early they can happen. Okay. So we don't, for the other countries where our exports have grown very well in Europe, etc., these plants are not of any use for export there.
No, so again, so I think what we're talking about the audit, and that is for the injectable plant, and we're not selling any injectable products anywhere, not Europe, not US. So first is we file for the US, and then it'll happen. The rest of the plants, the rest of the commercialized plants, which is API 1, 2, 3, and formulation F1, are approved by Europe as well as US, Brazil, Canada, everyone.
Thank you very much. All the
Thank you. The next question is from the line of Aditya Kenka from InCred Asset Management. Please go ahead.
Thank you for the opportunity. Hi, Pranav. Hi, Dr. Bharati. Hope you guys can hear me.
Yeah, all good. How are you doing?
Hi. I'm doing good, Pranav. Pranav, a specific question again, and sorry to bring this up again, but the price deflation in sartans, has this happened across SKUs, or is this a couple of large SKUs that saw significant price deflation?
So what has happened is there's two aspects of it. One is the ongoing regular routine business that we see on the sartans. And the second is over the last couple of years, we had a lot of one-time buy opportunities that was across the span of across the sartans on various ones. So that one-time buy opportunities have kind of disappeared, where we had a very high price and just short-term sales. So that has completely disappeared. As regards the other one where we do have share, we have seen erosion in pricing where some customers, some additional competition has come. So it's a combination of both.
Right. So therefore, fair to say that the price deflation has happened across SKUs, your Candid sartan and your Olmec sartan and Flow sartan everywhere.
Yeah, absolutely.
Okay. And the broader pricing, so sartans were obviously, richly priced given the environment and the competitive landscape, and that has normalized. But the rest of the product basket in US that you have, the pricing there has deflated for sure, but has it deflated around the same levels as sartans, or has it deflated significantly lower?
No, I think, by and large, I think what was commercially being supplied, I don't think there's too much of a change in the pricing there. What has disappeared is when a lot of the supply disruptions that we saw, which gave opportunities of short-term supply and one-time buys, those have gone out. Of course, bulk of these were in the sartans, but there was a handful of products where we saw this. But as a combination, those short-term opportunities have all gone from all the products because everyone is pretty much okay on supplies now.
Understood. Thanks for that. And second question on China. So while we are a vertically integrated company, I'm sure we are still buying some intermediates and basic chemicals from China. Could you give us a sense of how the pricing environment of those raw materials are? Are you seeing any inflation in cost of procuring such materials from China?
No, actually, we're not. I mean, while we do buy from we do buy from China. But last year was when there was a real constraint, but still it didn't impact us in any way. There was a little bit of inflation last year when we were trying to get more volumes because we saw a lot of supply opportunities. But this year, no, I think it's fairly stable. We're not seeing any changes. In fact, we're seeing more supply over the last 6 months from China. So pricing has been fairly stable. If not, there's been some reduction as well.
And the same would hold for, sorry.
For the India business, of course, we are not impacted much, but otherwise there is a general increase in API prices for locally procured or Chinese imported stuff for India business. So as far as we are concerned, the only impactful item is paracetamol and to some extent azithromycin. All other prices are almost stable.
Yeah, that's because both these products are being used on COVID patients, so there is a abnormal demand situation there.
Has really gone up, but erythromycin marginally. But otherwise, the increases have been more in vitamins and other products where we don't have much of agents.
Got it, Bharti sir. Thank you for that. One last question I have on the India business. So as you earlier remarked, your specialty businesses are obviously gaining share, and you said that the MRs have learned how to do business. The doctors have been vaccinated. So in the current financial year FY22, given that there is an outbreak again, there is a second wave, but doctors are still attending and MRs are still making their calls. Would you expect volume growth in the acute segment this year?
So too early to say that yes, we expect the growth to come back in this year, even in acute. Okay, one rider of course is it also depends on monsoon, acute particularly. So if we have a good monsoon as is being predicted initially, I think we should have a good run.
Understood, Bharti sir. Thanks so much, gentlemen, and all the best.
Thank you.
Thank you. The next question is from the line of Viren Dalal from Monarch Network Capital. Please go ahead.
Hi, it's Vineet Gala from Monarch Network Capital. Sir, thanks for taking my question. Sir, the launches that we are considering for the US business, that is around 10 to 15, right? So are we considering any injectable launches here out of the plant which is currently under remediation?
No, I have taken only the non-injectable launches, so it should be OSD, derm, and ophthalmic.
Okay, sir, but given the fact that if we are expecting, by H2, this injectable facility should be available for service, so there would be a bunching up of a lot of these filings, right?
So not as much, I think we filed about 4 or 5 products, I believe, from the 7 products. So it won't be as much bunching up, it will happen gradually. So that's what I haven't given that number in this.
Correct. And so how many products have you filed through a CMO partner?
I don't have that details with me, but pretty much all the ophthalmics, what we've launched so far in the market is through a CMO.
Okay. So on the last question, I just wanted a clarification. In the EPS guidance that we gave 2 quarters back, I just wanted to clarify if you have taken any upside from this rise in profit contribution that can happen because of these umbralisib milestone-based payments or any kind of out-licensing. So have we taken that for FY22-23?
So difficult to estimate that, but it's not part of the business, so everything is considered. To give a number to that is difficult. It's not something which is marketed by us, no? It's done through it's out-licensed to an independent company.
Fair enough. Okay, sir, that's it from my side. Thank you.
Thank you. The next question is from the line of Harith Ahmed from Spark Capital Advisors. Please go ahead.
Hi, good evening. Thanks for taking my questions. For umbralisib, there were approvals for a couple of indications from the US FDA during the quarter. Was there any milestone income for Ryzen on account of those approvals? Is that reflecting in the P&L for us as a share of profits from associates?
Yes, we did get milestone income, but there are spends as well actually at the Ryzen level. So and all of that is kind of blended, put into share of profit from joint ventures, which you can see in our published result.
Okay, and second one is on our receivable base as of March 2021. It's declined sharply versus September or March of last year. So anything particular to call out there on the receivables front?
Receivables, right?
Yes, trade receivables.
Yeah. So last year, we did discuss this actually. We saw kind of, US, there was partial or complete lockdown in certain places in US. And that's why there was embargo and we did not get our receivables. So there was abnormal high receivables on last March actually, March 20. So this was all kind of, got collected in first quarter. And these are more sort of, the receivables which you see. I mean, we are around 50 odd days at this point in time, so which is the number.
Okay. There's a decline from September levels also. That's why I had a question. Anyways, I'll maybe take it offline.
Yeah, so of course, if you see the collection has been quite, normal in a sense. Businesses, all the businesses, API, you say branded business, all of them are back to normal, and that's why these are the kind of later days that we see now.
Okay. And then the last one from my side, when you're given a guidance of 50 rupees EPS for FY22, you had also guided for 450 crores of incremental costs from the 3 new facilities. Now it appears that we won't be incurring the entire 450 crores this year, given that there's been some delays in inspections and approvals for those facilities. So will there be an upgrade to your EPS guidance because we're not, having the full year impact of the costs?
To that extent, the launches and the traction in US business also gets delayed. So it's maybe as Pranav said, as of now we stand by this number, and as we progress during the year, we'll keep reviewing and discussing with you.
All right, thanks. That's all from my side.
Yes, so difficult issue.
Thank you, sir.
Thank you. The next question is from the line of Tarang from Old Bridge Capital. Please go ahead. Mr. Tarang, your line is in talk mode. Kindly go ahead with your question, please.
Hi, sorry, I was on mute. 3 questions from my end. What proportion of our external API sales are exported, and some sense on how much of your overall API volumes are captive and how much are external?
So 95% of our sales are, export sales as far as API is concerned. And of the total sales, if we put the total volume, close to 35% is for captive and rest is for the external sales.
Sure. Mr. Amin, you've been significantly investing in R&D right from FY16. Just wanted to get some sense, qualitative sense on how do you measure the efficiency of the R&D dollar that you spend, and also if you could give some metrics that maybe you track internally to judge its efficiency.
Yeah, so I think it's a tough one, and because it's a combination of various factors. One is R&D itself, where you go, how long it takes to scale up, at what phase you get stuck. So it's very tough to do it. But what we do is before we select a product, we do a IRR, a NPV per product to see where it goes and how it gets to the market. So we still do that. We have an internal hurdle rate. We pick products for each segment. We analyze what time frame it will take. And that's how we do it, and we keep evaluating and we keep dropping products also on a routine basis. If we see the product is getting delayed or if we see that there's more competition entering. So that's some of the things how we evaluate the grid.
Okay. The last one, when will we, see the commercialization of your CVF? What procedural requirement are we looking for, that will enable commissioning? And out of the 1945 crores, how much is actually pre-operative expenses?
So out of this 770 crores are pre-operative expenses. And coming to your first question, the only challenge is, US FDA giving you approval for the plant. That's it.
So basically, we're waiting for the audit, and once we get an approval, we can commercialize and we move to the process.
The audit has already happened, actually, right?
Okay.
Yeah. So we are waiting there. So yeah.
Got it. Thanks. All the best.
Thank you.
Thank you. The next question is from the line of Bharat Sanghvi from Equirus. Please go ahead.
Yeah, hi. This is Bharat Sanghvi. So just wanted to clarify on the pre-operative expense. So it is 450 crores at this point of time, which we are capital, which is not hitting the P&L yet.
Bharat, come again. Didn't get your question.
Yeah. So just wanted to understand on the expense side, how much expense is not is not getting expensed out, it is getting capitalized in a way related to the new facilities.
Yeah, so that's what I said. I mean, for the year it was around 250 odd crores. Cumulatively, it is 770 crores.
250 crores. Earlier, sir, we used to guide for almost like 400, 450 crores. So what is the difference between 250 and this 450?
No, that was a last year cumulative number, and this 770 is current. I mean, so 450, I am not able to kind of recall with what you are talking about. We can take it offline.
But this 250 is pre-EBITDA, right? This is before deducting all these depreciation amounts, right? And this doesn't include depreciation.
Pre-operative is a balance sheet item. I mean, so it doesn't.
No, yeah, this doesn't include depreciation. You are right.
It doesn't include, right? Thanks. Sure. Thanks a lot. That's it.
Thank you. The next question is from the line of Kunal Randeria from Edelweiss. Please go ahead.
Good evening, and I hope everyone is safe and healthy. So, through the course of FY21, while you have very given a detailed explanation on how the sartan market has played out, I believe there is also some incremental competition in some of your other lucrative products like famotidine or feduxostat. So, have these products dropped out, or you see some downside to these products in the coming year?
So, as I said when someone else asked me earlier, I had said that by and large most of the erosion that we've seen is in sartans. But I also said that during the course of the year we had a lot of supply shortages and short-term opportunities on some other products. So one of them was famotidine. So in that supplies have kind of also sorted out. So I think what we're seeing is not erosion per se in the pricing, but what we're seeing is there's less short-term opportunities available in these products. So that's how I see the products moving forward.
Fair enough. Second, just a clarification, whether you have launched remodeling and could this be a meaningful opportunity going forward?
Are you talking about famotidine or?
Remodeling.
Midodrine. Midodrine is, I think, in the process of launching. We haven't launched that yet.
And this could be a meaningful opportunity for you?
No, I don't think it's a very big opportunity per se.
It's not. Sure. And just one last question, if I can, and it's a slightly longer term question. So once your new plants are operational and then you'll have 6 formulation plants, how should we look at your annual filing rate? So today it's around 25 to 30 annually for the past 4-5 years. So should this double going forward, or how should we just think about it?
So no, I think what will happen is the ANDA filing rate will remain similar. I don't expect it to go over this 25-30 kind of a level. We are currently in this rate has also included some of the Aleor products, which are the derms, some injectables, some ophthalmics already. So we've already taken that into account. So I don't think this number of filings will go up even with the new facilities, because the filings are already taking place as we speak.
So actually it has already gone up in last 2 years only. This is 25 plus. Earlier it used to be 20 or lower.
Sure. I understand that. But my main question was, since you'll have 2 injectable plants coming on stream.
Expense in absolute number will have only a marginal rise. It would not go up significantly from our current base. And so is the number of products filed.
Okay. But then would it be fair to assume your oral solid filings could be coming down and injectables could be going up going forward?
Percentage, yes.
Okay. Sure. Okay. Thank you and all the best.
Thank you.
Thank you. The next question is from the line of Arpit Kapoor from IDFC. Please go ahead.
Yeah, thanks for taking my question. Most of my questions have been answered. Just one bit on the injectable facility. We don't expect a re-inspection, right? So whatever assessment or whatever plan we submit, the FDA should approve it, and ideally we would not expect them to come again and re-inspect.
Yeah, so as I said, I don't expect FDA to come out for a physical inspection for anyone unless they deem it mission critical. I think since Last couple of months, the situation is even worse, so there's no chance of anyone coming for an inspection, in my opinion. But I believe with this, our inspection, it's going to be online correspondence. They've come and physically seen it. They've given observations. We've replied. So it's a back and forth that we're having with them right now.
Okay. And last one is on the CapEx for FY22, where we are guiding somewhere close to 500 to 600 odd crores. So this will predominantly be for the API plus the non-US exports.
The capex will be for API. Part of it will be API. Part of it will be, as Mr. Mayati mentioned, maintenance capex of all our other facilities.
Okay. So even going forward, we will have, let's say, close to 300 to 400 odd crores of maintenance capex.
Yeah. Exactly.
तुम्ही ज्या व्यक्तीशी बोलत आहात त्याने तुमच्या कॉलला होल्डवर ठेवला आहे.
Sure, I'm good. Thanks.
Yeah.
Actually, we have run out of time. There are few questions in queue, but may I request them to take it offline with me or Mitanshu? They're completely run out of time.
Sure, sir. I would now like to hand the conference over to Mr. R.K. Vitti, Director Finance and CFO, for closing comments.
Thanks. Thank you everyone for being with us. Pleasure always talking to you guys, and we'll keep interacting as we get to move deeper into the year. And I wish everybody a very safe period this time. Take care and stay safe. Anybody whose questions have not been responded, or there are some, I think, repeat questions, you also can get in touch with us directly offline. We'll be happy to respond. Thank you, everyone.
Thank you. Ladies and gentlemen, on behalf of Alembic Pharmaceuticals Limited, that concludes this conference. We thank you all for joining us, and you may now disconnect your lines.